فيها ولا يحيا قد أفلح من تزكى وذكر اسم ربه فصلى بل تؤثرون الحياة الدنيا والآخرة خير وأبقى إن هذا لفي الصحف الأولى صحف إبراهيم وموسى صدق الله العلي العظيم اللهم صل وسلم وزد وبارك على رسول الله وآله الأطهار على رسول الله وآله الأطهار. This is a surah called Surah Al-A'la. It is a favorite surah of Imam Ali alayhi salam. He used to recite this regularly after Fajr namaz. And those people, children who are sit for exam, they are told to recite this particular one so that they are able to remember. You know why? Because there is a verse there, سَنُقْرِئُكَ فَلَا تَنْسَى. I shall make you recite that you will not forget it. Because in another surah in the Holy Quran, the Prophet was making sure that he doesn't forget it. He was trying to read it many times, a bit in a hurry. Allah subhanahu wa ta'ala in His mercy said, don't worry, سَنُقْرِئُكَ فَلَا تَنْسَى. I shall make you recite that you will not forget, you see. And this is a very interesting surah. He said, بَلْ تُؤْثِرُونَ الْحَيَاةَ الدُّنْيَا وَالْآخِرَةُ خَيْرٌ وَأَبْقَى. But you're all occupied with this world, you see. But the akhirah is better and lasting, not this world. It's quite an interesting. I would suggest you go through this surah, and it will give you quite a good information. And who is the one who succeed? قَدْ أَفْلَحَ مَنْ تَزَكَّى. The one who purifies his soul is the one who succeeds in this life and the hereafter. Wassalamu alaikum wa rahmatullahi wa barakatuh.
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Can we start with the slides, please? نصر من الله وفتح قريب. My elders, seniors, Assalamu alaikum. I'll just wait for the slides to start off, inshallah. Alhamdulillah, we had a physical exercise and thereafter spiritual. We'll try and spice it up with a bit of financial if I can. My style of presentation is the fact that I would go with the flow, but if you have any questions, it's best to ask me at the same time as I'm going with it. Feel free to, there is no interruption as such. I like it two-way communication. Just waiting for the slides to start off, inshallah. Yeah, keep going. Okay. So before you wanna start, a bit of a health warning. So whatever I discussed today, please, 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 is only for the general guidance and information only. Do not DIY this into your own affairs before you seek any professional advice. The implications could be horrendous. So please do seek professional advice. This is there for the general guidance only. Go on, please. Next slide. And there's more emphasis on the fact that, you know, tax advisory. When it comes to tax advisory, I don't know why somehow. Even if it comes to legal advice or perhaps a medical advice, people tend to go and approach a professional. When it comes to taxation, somehow everybody is a professional and everyone has a say around taxation. So we often hear before even the client comes to us stating, oh, somebody told us this and somebody told us that. And around that as well, there is particularly a think tank that has been created recently on the taxation, a person called Dan Needle. He runs this non-profit organization where I work very closely with him. And if you scan the QR code, then you would know the bogus and the rogue tax advisors. They call themselves advisors, and they've made millions out of it. And after that, the HMRC, unfortunately, after the clients and not after them. So feel free to scan the QR code. Before even you go for any advisory sort, always go for 3 checklists first. The person who's giving you that advice, is he qualified? Does he have anything to lose? Qualification with any member body, any professional body. Is he qualified? Number 2, does the person has got professional indemnity insurance? So that even though if he's qualified, something has gone wrong or something could go wrong, you can go back to the indemnity insurance of it and make sure the person has it. And last but not the least, it's not what, after ticking 2 boxes first, it's not what he says or she says. It's what he is saying backing up with the legislation or the court case. That's what makes a solid watertight tax advisory. Once you have ticked all 3 boxes, it's highly unlikely you would go wrong. So it's always important that you go through with it. Next slide, please. That's me, by the way, 20 years ago. I had some hair, now no more. But yeah, just before I begin, a bit of introduction about myself. Keep going, there's a bit of more qualification that I have gathered, which I thought I shouldn't have gathered, but there you go. So I'm a member of 5 professional bodies, starting with ACCA, ICAW, STEP, ADT, SIFA, and now just almost finishing my CTA as well. So almost everything as far as the accounting and taxation is concerned in this country I've kind of covered. Above all, I started with the bachelor's in Oxford Brookes, and I'm also a committee member of STEP and also ICAW. So when it comes to taxation, I kind of know what I'm talking, and it's equally important that you understand and talk and communicate with the person who gauge the importance of taxation around the matter. Please go ahead with the next slide, please. Next slide, please. Okay. So I'll start off with the synopsis, and the topic here is the death and taxes. Previously been told this world is not as good as the world hereafter, and somehow the taxman kind of knows how to collect the revenue more appropriately. And I'll give you a very layman example of it. It's my pen, and it's here. If the taxman or anyone tried to take it from here, 20% or 25%, even a full of it, as a tax, I would do everything in my power to reduce it while I'm alive. But if I'm dead, that pen is there. My beneficiaries could be there, but they would not have that inclination because it's not their hard-earned money. And that's what HMRC knows it very, very well. So to take anything out of it, it's very easy now because the person is no longer there. I can't do anything about it if the tax were to go. And that's what we are saying day in, day out when we do the probate of people. Because gone were the days when people used to say, oh, I'm a millionaire. I guess everybody is kind of a millionaire. If you live in London, if you got a couple of properties, there you go, you're a millionaire. So those days have gone. But what I would try and resemble with the fact that the thresholds for the taxation has remained the same since 2009, and the massive impact of it on our taxation is huge. So we go with just an overview, just a simple layman overview. on the income tax. So it's 20%. Of course, it goes up to 40 and 45, but that threshold. It goes 40% only when you earn more than 50K. Otherwise, it's 20%. Then capital gains tax 10% to 28% max. Corporation tax again in the range of 20%. Look at the inheritance tax. 40%, and it's a flat rate 40%. There are no slabs. You only get a threshold, which is a very minimalistic £325,000. Thereafter, cutthroat 40% straight away. And that's what the inheritance tax, that's why how lethal it is. Next slide, please. Next slide, please. I hope you are awake. Yes, yeah. Yeah, sure, go on. It depends what the value of the property is at the time of death. Depending on the value of the property at the time of death. Can I have the next slide, please? Brilliant, mashallah. With the death and taxes, if someone were to die, God forbid, property inevitably would form major part of a particular estate, give or take. The person would need at least a roof overhead where he would live in. He may not have a buy-to-let property, he may have a business, but he would have at least a property. And forget about going for the death tax, let's go about the lifetime tax itself. Say for example, I'm dealing into property. I bought a property, worth say 100K. I made a refurbishment of 50K, and now my market value is 200. So hey ho, I've made a profit of £50,000. But is that £50,000 I've taken home? No. I would have inevitably would have paid at least £3,000 of stamp duty and £14,000 worth of capital gains tax. So in essence, if I sell the property, I pay £17,000 in taxes. 17, that's almost 1/3. And I would love to be proven wrong otherwise. I'm here all day long. And worst case, if I don't sell it and I keep it, I'm going to pay 40%, which is even more, £20,000. And that's what is happening. So either 17 or 20, I make a choice. But as you are here, all gathered to listen to me, as I go along, I would try and give you tips as we go along. Make notes of them, but again, please do not implement it straight away. Seek professional advice. So just to tackle the stamp duty land tax, I would buy a probate property. That means if someone dies, and I buy a property from them to flip it, I don't pay any stamp duty land tax. And I mean each and every word of what I said. Like that, there are about 37 more relief that you could apply to get off your stamp duty land tax. Imagine you bought a property worth £1 million. Stamp duty land tax in itself on that particular property could be at least 100K, if not more. And that will be completely wiped off if you plan it properly. Capital gains tax. Whatever capitals I have made out of it, whatever gain I have made out of it, if I invest into an SEIS company, which is Seed Enterprise Investment Scheme of the government, I could wipe off complete the entire capital gains tax as well. So yes, there would be taxes, but there are always available relief to set off against. Next slide, please. And again, the concentration would go back to, again, the inheritance tax. I have given the synopsis earlier for the direct taxes, income tax, capital gains tax, and so on. I would go back to in the past, so 2009-10. So the basics of any taxation remains the same. They say up to a level you don't pay any tax, thereafter you start paying tax. So back in 2009, they are saying, oh, you are earning and you have got employment income. Say for example, you were to hire me for £10,000 back in 2009, and God bless you for that if you were to do so. Up to 6,475, I would not pay any tax. Anything more, I would start paying it. With the time, there's something called inflation, yeah, consumer price index. The price of potato back in 2009 is not the same as the price of potato now, is it? It has gone up, and hence the threshold which has gone up as well. So now they're saying up to £12,500, you don't pay any tax. Anything thereafter, you start paying it. So likewise, the NIC and other threshold keep on going up. Look at the inheritance tax threshold. It was 325,000 pound back then. It is 325,000 pound till now. Not even till now. It would remain up until 2028. Frozen. Look at the rate and look at the difference. This time we went a bit quicker, which is good. Alhamdulillah. That means you are awake. But yeah. So up until 2028, the rate would remain the same. And the threshold. Let's look at the implication of that. By fixing the threshold, how smart it can be from the taxman point of view. Can I go for the next slide, please? So I've just taken some humble properties from London Zone 1 and Zone 4. I've not gone anywhere near South Kensington or Chelsea or Mayfair, just to give you the example of it. A layman one. Zone 1 property and Zone 4. You can just Zoopla it as well. I've taken from Rightmove. What the property value was back in 2009, what the property value is in 2023. That's what the property difference is. And any difference that property has seen, 40% of that chunk has been taken by HMRC Sweetly. So if you were to have even the Zone 4 property in Wembley, the inheritance tax on that property will be 272,000 pounds. That's a huge, huge sum. That's a huge sum. On a property worth 680, you're going to pay 272k inheritance tax. Yeah, so 325,000 pounds, as I say, any threshold is per person. So if it's husband and wife, you multiply it by 2. So it's 650, of course. Yeah? Yeah, if they have only one property, this is the scenario of anybody who has exhausted the inheritance tax threshold limit of nil rate band. So that's what the underlying assumption is. You already exhausted your inheritance tax threshold nil rate band. This could be a buy-to-let property of yours, or any other investment assets which is exceeding a threshold of 325,000 pounds. Then that's what you start paying off. So goes without saying, in my previous example, which is 325,000 pound threshold, if your total asset, and if you are married, or even if your wife were to be widowed, or husband were to be widowed, either way, up to 650k you are fine, you are covered. If your equity is up to 650k. Problem arises over and above 650k. But it's not that really, is it? Because the property if I have now, which is worth, I don't know, say 680. Would the property value be same in 3 years, 4 years time? What would it happen to? Go up or down? Exactly. But at the same time, that 650 would remain the same, isn't it? It's very smart and cunning way of collecting tax. So it would keep on going up. My level is the same. When I bought the property, I was way below level in 2009. From 2009 till 2028, it's almost 20 years. In 20 years' time, the level has gone up. So now, this threshold has remained the same. And hence the reason on any increment that has seen, I have paid 40% of it. Instead of them going it to my children, or as per my legacy, to my charity, or anybody that I would like to wish to give it to. That's what is happening. So when person dies, it's 325,000 pounds per person. However, they can transfer the nil rate band from husband to wife, and wife to husband as well, in between spouses. So they can transfer it, but only between one marriage. So for example, one spouse, Mr. A dies. Now Mrs. A decides to remarry. Then Mrs. A would only get the nil rate band of Mr. A who died, because otherwise I'll keep on marrying, and I would have 325,000 pound times unlimited. So you see, we have to be reasonable here. It doesn't demotivate you, I hope, to get married. You should, if you want to, but you would only get 325,000 pound once, if that's okay with you, yeah? I'm hoping that I'm not coming up as a, family planner or wedding planner, but yeah, that's what it is. Go on. Okay, this is getting a bit more. Yeah, I can sense that. No, second wife gets her own 325,000 pound, but she cannot get it transferred from the first wife. She can get it transferred. I can't believe I'm discussing this, but yeah, she can get it transferred from the husband only, as long as she has only one husband. Even she were to have more than one husband, then no. It's only one spouse, one life partner. Okay, so same sex or whatever, they would have to have it. So that's the implication. Can I have the next slide, please? So we've discussed about the 40% inheritance tax. Some of us maybe say, yeah, I'm way below 650, my equity is way below 650, I'm fine. But it's the matter of time if we were to go up. If you were to go up, you would pay 40%. Let's look at what we can do. What we can do to mitigate tax. My tip earlier, if you would have noticed, if you want to buy and sell the property, buy probate property. You would not pay any stamp duty land tax. I mean each and every word of it. And if you have sold something and you have done a capital gains, invest into a company which are startups, and they're called EIS or SEIS. Google search it, then you would know what I'm talking as well. Now let's talk on, we've talked about the problem, let's talk about the solution, what we can do to mitigate the inheritance tax. The first and the foremost thing that we can do, and it's very simple, is just to draft a will. Just simply draft a will. I mean, I have drafted my will. There is no, the reason I get and excuses that I get of not drafting the will is the fact that, oh, I'm too young. What guarantees me to be alive the next minute or even the next second for that matter? Or I have nothing to give it to my beneficiaries. I don't have anything. Even in that case, inevitably you would have something else. For example, you could have disabled children, or the children who are minor, they need some protection. As long as you've put an executor, you don't need to apply to the court to get the permission of it. So it saves time and money, more importantly. A court application itself will cost you at least a couple of £1,000 from the legal solicitors. You just draft a will. I'm yet to hear somebody who has paid hundreds and tens of thousands of pounds to draft a will. No. It mostly goes to the 3-figure. I'm yet to hear anybody paying 4-figure for drafting a will. And it's as such as you can draft your own will if you want to, but I would not recommend, because A, it doesn't cost us to draft the will, and B is much more secure and get tax efficient as well when you draft the will. Now, when you draft the will, the dilemma could be that whether you should draft Islamic way or your tax efficient way, that's your personal call. But if I were to go for the drafting will, always remember there are 2 beneficiaries that you give any amount and anything that you want to give it to, there is no tax on it. The first beneficiary is your wife, whether you like it or not. And second beneficiary is charity. It has to be a UK registered charity. Anything to give that you decide to give in your will to either of them, there would be no inheritance tax implication. Inheritance tax would only be applied after this due beneficiary been exempted from it. Number 1. Number 2, Islamic will, just to give you a synopsis, in essence, what Islamic will says as per the Quran is 1/3 as per your wish and 2/3 as per God's wish. So you can still decide about 1/3 of your estate, whom do you want to give it to, but 2/3 has to be as per the God wills. And that's where the question comes in, whether you have a wife, whether you have a children, and then whether you have mom and dad, you have brothers and sisters, and the bifurcation is there within. The reason why will drafting is so important is that if you don't draft the will, unfortunately your own estate that you have hard earned would be divided as per not your wishes, but as per the government's wishes. It's called intestacy rules. And that's what it will be divided as per, which you don't want it. You would wanted your estate to be distributed as per your wish. And that's what government would want you to do as well. But they're saying, we gave you opportunity while you were alive. You didn't do that. So now it has to be as per our will. Okay? So that's will side of it. Last, yeah? Absolutely. Yeah, absolutely. It doesn't have to be in front of lawyer. So there are few requirements of drafting the will. The person who's drafting the will has to be over 18. Okay? So minor cannot draft the will. He or she should have the sufficient mental capacity. And that's where the question arises, where somebody was going through dementia or any other mind-related problems medically. It has to be certified by a medical professional that the person has got sufficient mental capacity to execute a financial document. And last but not the least, it has to be dated, signed by the person who's drafting the will, and there has to be 2 witnesses. And if you are planning to do the will at your home, which I don't recommend because it doesn't cost us to draft the will, but even if you want to, the witness should not be the beneficiaries of the will, yeah? Otherwise, they would forfeit the benefit. So, for example, if I decide to give, I've got one son and my wife. I say 50% to wife, 50% to son. Witness, yeah, okay, both of you sign it. None of them will get it because they have to be independent witnesses. Okay? That's that. Not only that, to answer your question and yours as well in terms of marriage, I drafted the will now. After drafting the will, after 2 years, I remarried. My previous will is nullified now. Yeah, that's also important. But after drafting the will, God forbid if I were to be divorced, the will is still valid. Okay? So there are many implications around it. Hence, be careful. Yeah. So witnesses doesn't have to read your will. Yeah, they are not. They doesn't have to. If you want them to read, up to you. So the question is whether you can do something fraudulently and somebody will find out whether you have done fraudulently or not. I mean, people would not normally do that. Just to get independent witness, I can just ask anybody from here, 2 witnesses have drafted the will, can you please sign it? That's it. It doesn't matter. So after your death, the government or taxman is not going to go to that witness's doorstep stating, you signed this bill. No, no, no. It's not as much that way. Yeah, it's fine. Charity. Absolutely. Provided the charity is not just a charity for namesake. UK registered charity or EU registered, basically EEA registered charity. Entire Europe is fine. Yeah, but it has to be registered. If it's your own charity, it's fine. It's not contentious. As of now, it's not contentious. It all depends. It all depends. For example, if your estate is worth say 2 million and you have given 1.8 million to your charity, then the investigation could be arised. But if it all depends. It's subjective. It's again, they are not saying no to it. But if you have given 100K to your charity, it's fine. But if you give 1.8 million just to avoid inheritance tax, it clearly says it looks like you're avoiding inheritance tax. Then we could go into it because then, yeah, because then I could have a charity. From your own charity, your children can get a salary and things can go around. So these are all without inheritance tax implications. So again, lasting power of attorney, if you're drafting the will, you may as well do the lasting power of attorney. It doesn't even cost us. Again, the same thing. I think £70 to register lasting power of attorney. It doesn't directly save you inheritance tax, but it could potentially, for example, I have drafted my lasting power of attorney, but I have not drafted the will yet. Yeah, but I've drafted my LPA for finance. Now the person I've given the attorney to himself, he can now execute a financial document on my behalf. So he can do something on my behalf, and hence this could be an inheritance tax planning point of view. So while I could not do it, he can still do it because I've given him authority. So that's on the LPA side. The best is to give away. So for example, this and this and this is what my asset is. Yeah, 300, 300, 300. I've got 900. We all know that if I die, maximum, even if I'm married, is 650. Anything more than that is subject to inheritance tax. So if I die with 300 each, 900K, I'll be subject to inheritance tax, obviously, because it's more than 650. The only way so that I don't die, when I die, it doesn't form part of my estate, is to give it away. So it's given away. Now when I die, it's only this much. 300, 300, below 650, and hence no inheritance tax. Now, when you say give away, there are only 2 ways of giving it away. Number 1, I give it away outrightly to you, that's yours. Or number 2, I give it on trust for the benefit of you, and it will go through you. But indirectly, rather than directly, indirectly. The benefit of giving it through trust as opposed to outrightly, I could give it to you saying, son, this is for you. I have to just live 7 years from that date. So it doesn't form part of my inheritance tax, part of my estate. But I wanted to benefit my son. Son said, thank you very much, Dad. The door is there. Because from the day I have given it to my son, or anybody for that matter, that particular property or asset now belongs to them on title deed and beneficial deed as well. So they can do whatever they wish to do. He may have sold the asset, bought a Ferrari, went for holiday, and money is finished. I wanted to benefit him, but not in his term, on my terms. So that's why this is called smart gifting. I give it, I live 7 years, but he can't do anything about it. It's as per my terms. I say, okay, give him only £1,000 every month. That's what would happen. That's what trust does. It's a controlled gift. It's a smart gift. And worst case scenario, now World War III has happened. I've lost everything. I've got only this one left now. I don't have any of this. It's lost. I said, forget the inheritance tax, forget everything. I want to dissolve the trust and I want to take it back. I can take it back. But if I have given it to you outrightly, from the day I have given you, it's yours. I can't take it back. So these are the advantages of having the trust as well. So basically, if you have anything, in a simple layman's way, give away and live 7 years. Of course, there are many ways of mitigating inheritance tax, but this is the basic ones. Okay? Give it and live 7 years from that date. It's not part of inheritance tax. It doesn't mean that if you were to die on 6 years and 364th date, the entire would still be subject to inheritance tax. No, you would get a lot of relief. The more you live, the more relief you get. So the less inheritance tax you pay. Okay? But the clock starts after 3 years. So to live minimum 3 years. Hence, the more you have, the earlier you need to plan for inheritance tax. Okay? He had an asset in Kenya, he sold it. Yeah, so obviously when he sold the asset, highly likely he hasn't have the control of the asset. The funds have been given to children. I don't know what has happened. I can't comment on it, but clearly he doesn't have the control over the asset, and hence the reason what his situation is currently as of now. Yeah, but it's not a tax question, so I don't know how to answer. I could recommend to see him or them. They can get remarried, and then but yeah. So again, so if you were to give it outrightly, you are losing control. If you would have given it in trust, then you would have kept it. In fact, you can give it into trust, and I shouldn't be discussing this over the mic, but at times people would say, if I were to go for a care home, I have to pay the care home fees. It all depends on the financial aspect of it, how financially savvy you are. But if you have given it to trust, it's not part of your estate. So it's legitimate legal tax planning that you're doing it. You're not doing it to mitigate the care home fees. By the same time, it's with one stone, you're hitting two birds. So A, you're saving your tax for inheritance tax for your children. The same time, you're controlling it. So for example, I've got 3 children. I said equally amongst all 3. And as of now, every month they get 1,000. Maybe second child got married, and I don't like the wife or whatever happened, and I don't like the son anymore. I can take him off. I can do whatever I want to do. It's completely flexible. Depending on the type of trust you create, I can decide whatever I wish to do. Or maybe say I don't want any of them, I would give it to my charity, or I can give it to whoever I want to. Like I said, there's complete flexibility over it. It's like a plain document, trust. Condition that you want to put on is what your wishes are. Again, within the legitimate limit. Yeah, you can put in as well, but it's not the case of they should look after you, because you are not giving it to them anyway to begin with. You're not at their mercy. They are at your mercy. You are in control. At so much so that you can even control from your death bed. From even your cupboard, because you can decide but I would not recommend that, but if you want to be really ruthless, you can decide even after your death who gets what for the next 10 years, and the trust would still be alive. But again, that will be some separate discussion at some different time. No, trust doesn't have to be registered unless the trust earns any income. So if I have this 300,000 asset and it's just 3 solitary diamond, yeah, 3 solitary diamond, they, I don't know, they are 3 diamonds worth 100,000 each. Now diamond by on its own sitting there does not earn any recurring rental income or income. So I don't have to register the trust. But if if this were to be a property, now property I have rented out and there's a rental income coming in, then I have to register the trust with HMRC, because the income that is coming in, it has to be paid tax on. So depending on what you're settling into trust, yeah? If it's generating income on a regular basis, you have to register. If it's not generating, fine, no need to register. No need to register. But I would still register, but no need to file the accounts, because then HMRC knows, oh, Mr. X has registered a trust. They know they have settled 3 diamonds into the trust. You declare them as well. Because when I die, they know, oh, these 3 diamonds, he told already 9 years ago he had a trust. So it's not part of his estate. No inheritance tax on it. This is how it works. You can, technically. I would definitely not recommend. It's a very complex matter. If I'm not recommending will, I'm definitely not recommending trust. Yeah. It's like somebody who's studying for 4 years and 5 years just to do how to draft the trust, and you're planning to do trust on your own. I would not recommend. But if you want to, by all means, you can. If you're a legal professional, you potentially can. A lawyer or a staff member like me, you can. But otherwise, a layman, I would not recommend. Yeah. So we have told you about what the trust is in essence. It's nothing but just giving it something, but smart gifting. You control it basically. That's what it is in layman's term. Types of trust are only 2. Just like in human being, we have only 2 types, male and female. Yeah, barring the exceptions these days now. But mostly male and female. That's how it is. In trust, there are only 2 types. Discretionary trust and interest in possession trust. What you might have heard of, disabled person trust, minor trust, 18 to 21 trust, investment trust, cash bond trust. These are all the characteristics of the trust, such as a doctor, a lawyer, an accountant, Maulana. These are all the characteristics, but behind them, there either could be a male or female. So that's what I'm saying, either discretionary trust or interest in possession trust. And we normally go with the discretionary trust. Okay? Discretion means everything is at the discretion of the trustee. Fully flexible. I decide whatever I wish to. Even if I've written something on a black piece of paper, white piece of paper with trust deed on it, after 3 years I decide to change it, I can change it. I can do whatever I want to do, in essence. Yeah. 4 number, BPR or APR, which is business property relief. If we have a business, it's important that we tick the box that this property or this business would not have an inheritance tax. So by the way, I've talked to you about the inheritance tax on the property. If you have a business, highly likely business don't pay any inheritance tax, yeah? But again, depending on the business, the condition is the business should not have bulk of the bricks and mortar. And the bulk is more than 10%. So if my business is buying and selling properties, then I would pay inheritance tax. But if my business is buying and selling pens, I would not pay inheritance tax. But I could have, I don't know, a warehouse where I'm keeping the stock of the pens. Now my pen stock of my pen is say 100,000 pound, but the warehouse is 300,000 pound. I would pay inheritance tax because bricks and mortar is more than 10% of 400k. So again, it's subjective. It's subjective, but mostly businesses do not pay inheritance tax. Okay. Life insurance. Many of us could take life insurance. If we have taken the life insurance, very important is to know that your insurance money on my death goes to trust and not go to my estate. So I should not say on my death, give it to my wife. Yeah, no problem. Or my children. Or my second wife for that matter. No. It should go to trust. And then from trust, it should go to wherever they want to. If it goes to my wife or my children or my beneficiary directly, it falls part of my estate. And I have to pay inheritance tax even on the life insurance policy, yeah, by the way. So if the proceeds gives 100,000 pound, 40,000 pound goes out of it. If it's not trust in place. It's a very minor attention to detail, but if you can implement them, they could do wonders. Okay, so if you have insurance policy, go home and check whether you have trust in place or not. They would give you by default. It's free, but sometimes you have to ask for it. Okay. Number 6, principal private residence. So we've talked about 325 and 650, but that can go up to £1 million, provided my own property where I live in is going to my direct descendants. Means it has to go to my children or my grandchildren. It cannot go to my uncle, auntie, mummy, daddy, even my wife for that matter. If it goes to my wife, my threshold becomes 650. But if it goes to my children, my threshold becomes 1 million. It's complicated for a particular reason, so that a layman doesn't understand and they pay more tax. As simple as it is. What more can I say? But that's what the legislation says. Yeah. So 650, remember, husband, wife, goes up to 1 million. But only if my own home is worth 1 million. Say I'm worth 3 million. Okay? And $500,000 is the property I live in. 250, I've got other properties. I will not get 1 million. I would only get $500,000. But if my main property is 1.5 and other properties are 500, 500, 500, I will get 1 million. So there's a huge difference. The difference of £500,000 more additional inheritance tax. £500,000 times it by 40%, £200,000. Do your maths. They are huge figures we are talking. SASIS and SIPs, these are smart pensions, but I don't think I have time to go through with it. In essence, if you have some funds, rather than keeping into trust, and trust do whatever trust does it, you can have into your pension pot as well. But mostly if we have a pension pot while we are working, we have no control over pension, isn't it? We know that Mara pension, but not the least, is the hallmark of everything, which is employee remuneration trust. So even if someone were to come to us with the cancer stating, I'm going to die in, God forbid, in the next 3 months or 6 months, and I've got 5 million, and I know I'm going to pay inheritance tax of 40% on it, there's some quick remedy called employee remuneration trust. We put the entire assets into trust for the next 10 years or so, and the entire estate is subject to no inheritance tax. But again, this is again a separate discussion altogether. Post-death. These are all talk about what we can do before death. Now what happens if I have not drafted the will? I have not done any inheritance tax planning. I have not given away anything in my life because I didn't bother. I thought I'm going to live 1 million years, but I died. Now what happens? Now is there anything that I can do to mitigate inheritance tax? Because mostly dead means end of game, but not necessarily. Provided somebody has died in the last 2 years, I can play around with even the will or even the intestacy rule. Remember what I told you? Only wife and charity are exempt. If I drafted a will, say for example, and I said 50% to my son, 50% to my wife, as a result there is inheritance tax liability of say £200,000. I can, my son can then say, no, give 75% to mom and give only 25% to me. Because more is given to now mom, the inheritance tax would now reduced. All of this can still happen even after death, but time limit is 2 years. Okay. And remember we talked about getting married and second marriage and third marriage. So it's not just a nil red band that gets transferred, which is £325,000. It's the £175,000 of the residence nil red band can also be transferred. So $500,000 that was not used can be transferred after death of one spouse to another spouse up to $1 million. Yeah. So you don't have to use it. You can still use it. You still have the entire 1 million before the second death of the husband and wife, whoever dies later. Next slide, please. Got 5 minutes. Next slide, please. So who dictates the transfer? Depending on whom you have approached as a probate practitioner. We of course do probate, but either lawyer, bank, or the accountants can do the probate, and then the person can guide you as to this is what the inheritance tax liability is. They amongst themselves can plan it. But if I'm a son and if I've got 40%, I should be happy to give away 25% to my mom, and the benefit is only from the inheritance tax point of view. Then I can do that. Yeah, and it's all legal tax planning. Okay. Next slide, please. Yeah, and one size cannot fit all. Go for next one, please. Keep on going. Keep on going. Keep going, please. Okay, thank you. Go back, please. Thank you. Has anyone heard of family investment company? It's called Freezer Share. No? Okay. So myself and my wife, we have say 3 properties buy to let. Instead of having it under own name, we thought we'll put under company name. Because if the property value is now what, say, I don't know, £100,000 each, £300,000, in 10 years time it will go up, right? It will go up. So we say, okay, we'll put into family investment company. What it does is, smartly, it freezes the value that I have put into company. So if I've put 3 properties as of now, and after 30 years, 3 becomes 7, there will be inheritance tax, but only on these 3 properties. The remaining 4 will be outside inheritance tax. It will automatically go to my children if it's a family investment company. Otherwise, everything would be subject to inheritance tax. But so it basically freezes the value from the day you put into capital. Okay. Next slide, please. And yeah, this is the final bit. How many of us know that the dividend from trust is subject to no income tax? Well, there will be income tax, but it can be potentially wiped off. No? Okay. Keep going, please. Keep going. Keep going, please. Thank you. Thanks. So, go back, please. Thank you. So we've taken the example. On one hand, I have a buy-to-let property. I'm earning rental income, say £12,000, £1,000 rental income per month. So my income is £12,000. Yeah, it's under company. Say the repair cost of £2,000, so the profit is 10,000. On the company, would pay at least corporation tax of 19%, so that's 1,900. And any dividend that I receive from the company is now further subject to dividend tax of 2,713, assuming I'm a higher rate taxpayer. So to earn a £12,000 worth of rent, £10,000 of profit, I have paid £4,613 worth of total tax, corporation tax and income tax, minimum. Replicate that with the trust, and it's a discretionary trust. Again, the profit is 10K. Trust pays higher tax, 4,500. But it all depends on whom do I give it as a dividend from my trust. So if I decide to give, and it doesn't have to be UK resident, by the way. It can be any Tom, Dick and Harry sitting anywhere in the world. As long as the person has got no UK income, when I file that person's tax return, so I've paid 4,500, now 5,500 is left. I give it to him. That guy is sitting in America. He's got no other income. He's got no UK income. When I file that person's tax return, HMRC will refund the entire tax suffered by the trust to that particular beneficiary. This legislation is only there with the trust, not with company or any other. It's only there with the trust. Why? Because HMRC says, oh, you poor guy, you received a dividend from the trust, I'll give it to you back, provided the person has got no UK income. Okay? In essence, you effectively pay no income tax at all whatsoever. So not only when the smart tax planning you save inheritance tax, but you also save income tax. Okay? Next slide. And lastly, we finish on time, alhamdulillah. Can I go for the next one, please? Next one, please. Any questions, please? Feel free to ask me. I think I've already answered the marriage question, but yeah, go ahead. Another one. My plan is to have it in summer. So that particular session will be just nothing but about drafting the will. So that in that particular session, hopefully the idea is by end of that particular session, everybody would have their will drafted. So we'll have a document in which they're just supposed to put their names, decide which particular will they want to go for, Islamic will or non-Islamic will, and witnesses, we have enough people who can witness it, and those who would want to willingly, of course no force, but those who would want to willingly can at least before leaving the masjid have the will executed, or have something to go home and get it executed to work on basically, inshallah. But it'll be a separate session. Inshallah, that will happen, because the reason happens is, the reason being because it becomes subjective at times, because I'm drafting my will. I do not necessarily want to share it with you what I'm writing, you see. So, and this is becoming a general public exercise. So I will have more generic discussions there, but again, the person will decide on their own based on circumstances. Executor can be anybody. Executor can be wife, children, anybody. But on the witness side as well, yeah? Remember, I've said my wife or my son cannot sign as a witness. Even my son's wife cannot sign as a witness, yeah? Is that strict? Yeah, even if my daughter-in-law signs a witness, son will not get any benefit. So is that crucial? Not only beneficiary spouse cannot sign witness as well. Yeah? I didn't go that far, but that's what the legislation is. Okay? It's a practical question that has been asked. Well, it depends where you're going. If you're going to Afghanistan, then you should be fine. Yeah, so now here you're asking a different question. The question is not about just moving abroad to, but HMRC will come after my life or not. Not that question. Question is actually, now the question here is the fundamental of domicile. And domicile is different to residency. I'm going little complex, but it should be fine. So, remember I've told you about income tax, capital gains tax. They're all about residency. They're not about domicile. Residency in layman's terms, if I live in this country more than 183 days, I'm a resident. But that's not domicile. I could be living here for, I don't know, say 3 years I've been living here, but it's still not domicile of mine. Domicile means my permanent home. Where is my permanent home? I've been living here for the last 3 years, but my permanent home is in Singapore. How? Who defines it? My children are there. My wife is there. My children are studying in Singapore. So that's what my permanent home is. I may be going just one week in a year, but that still defines my permanent home. Where I belong to Singapore. So where my permanent home is, if you have sold everything, but you still have one house, if you have your wife and children still here, then you're subject to inheritance tax, and they will come after your life there. But if you have nobody here, your permanent home is there, wherever you are, then you're fine. It's called domiciled. Yeah?
Does it have to be a written will? Can I do an oral video will? Your blog where my witness maybe?
Question is, you can, but then second question is, why would you do that? So, that's what they would question as well, HMCTS, as in why he did that. Because if the person is disabled or has got some difficulty, I can understand it. But a sane, normal, 2-leg, 2-hands person, why would he not do it? Yeah? It has to be.
But the option is there.
Options are there, but again, it's not as simple as, okay, let me start iPhone, record it, and then that's it. No. There has to be, again, some, process to be followed. Anybody can write LPA, anybody can write will. No, yeah. So the difference between will and LPA is, will, you can just write it down, takya niche rakhi diyo, is still applicable. But LPA, no, it has to be registered, it has to be paid. Because will takes into effect post-death. LPA takes into effect pre-death. LPA affects my action taking before I'm dead. LPA has to be witness as well. Yeah, of course. There's a whole form for LPA which has to be witness. Goes without saying. Okay, I think I'm running out of time. Thank you so much. Thank you. Alhamdulillah. Witness and executor. It can be any witness. Executor, there is no restriction. Witness can be any witness as long as it's not the beneficiary or the spouse of beneficiary. End of it. Okay, thank you. Thanks a lot. Khuda Hafiz. So we'll have a session whereby the intention is that by the end of it, everybody should have the drill drum.
Ask Mustafa to come and recite. Sing for us. Yeah. Thank you.
أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. ياسين والقرآن الحكيم إنك لمن المرسلين على صراط مستقيم. تنزيل العزيز الرحيم لتنذر قوما ما أنذر آباؤهم فهم غافلون. لقد حق القول على أكثرهم فهم لا يؤمنون. إنا جعلنا في أعناقهم أغلالا فهي إلى الأذقان فهم مقمحون. وجعلنا من بين أيديهم سدا ومن خلفهم سدا فأغشيناهم فهم لا يبصرون. وسواء عليهم أنذرتهم أم لم تنذرهم لا يؤمنون. إنما تنذر من اتبع الذكر وخشي الرحمن بالغيب فبشره بمغفرة وأجر كريم. إنا نحن نحيي الموتى ونكتب ما قدموا وآثارهم وكل شيء أحصيناه في إمام مبين. واضرب لهم مثلا أصحاب القرية إذ جاءها المرسلون إذ أرسلنا إليهم اثنين فكذبوهما فعززنا بثالث فقالوا إنا إليكم مرسلون. قالوا ما أنتم إلا بشر مثلنا وما أنزل الرحمن من شيء إن أنتم إلا تكذبون. قالوا ربنا يعلم إنا إليكم لمرسلون وما علينا إلا البلاغ المبين. قالوا إنا تطيرنا بكم لئن لم تنتهوا لنرجمنكم وليمسنكم من عذاب أليم. قالوا طائركم معكم أئن ذكرتم بل أنتم قوم مسرفون. وجاء من أقصى المدينة رجل يسعى قال يا قوم اتبعوا المرسلين اتبعوا من لا يسألكم أجرا وهم مهتدون. وما لي لا أعبد الذي فطرني وإليه ترجعون. أتخذ من دونه آلهة إن يردني الرحمن بضر لا تغن عني شفاعتهم شيئا ولا ينقذون. إني ذا لفي ضلال مبين. إني آمنت بربكم فاسمعون. قيل ادخل الجنة قال يا ليت قومي يعلمون بما غفر لي ربي وجعلني من المكرمين. وما أنزلنا على قومه من بعده من جند من السماء وما كنا منزلين. إن كانت إلا صيحة واحدة فإذا هم خامدون. يا حسرة على العباد ما يأتيهم من رسول إلا كانوا به يستهزئون. ألم يروا كما أهلكنا قبلهم من القرون أنهم إليهم لا يرجعون. وإن كل لما جميع لدينا مهدرون. وآية لهم الأرض الميتة أحييناها وأخرجنا منها حبا فمنه يأكلون. وجعلنا فيها جنات من نخيل وعناب وفجرنا فيها من العيون ليأكلوا من ثمره وما عملته أيديهم أفلا يشكرون. سبحان الذي خلق الأزواج كلها مما تنبت الأرض ومن أنفسهم ومما لا يعلمون. وآية لهم الليل نسلخ منه النهار فإذا هم مظلمون. والشمس تجري لمستقر لها ذلك تقدير العزيز العليم. والقمر قدرناه منازل حتى عاد كالأرجون القديم لا الشمس ينبغي لها أن تدرك القمر ولا الليل سابق النهار وكل في فلك يسبحون وآية لهم أنا حملنا ذريتهم في الفلك المشحون وخلقنا لهم من مثله ما يركبون وإن نشأ نغرقهم فلا صريخ لهم ولا هم ينقذون إلا رحمة منا ومتاعا إلى حين وإذا قيل لهم اتقوا ما بين أيديكم وما خلفكم لعلكم ترحمون وما تأتيهم من آية من آيات ربهم إلا كانوا عنها مؤردين وإذا قيل لهم أنفقوا مما رزقكم الله قال الذين كفروا للذين آمنوا أن نطعم لو يشاء الله أتمه إن أنتم إلا في ضلال مبين ويقولون متى هذا الوعد إن كنتم صادقين ما ينظرون إلا صيحة واحدة تأخذهم وهم يقسمون فلا يستطيعون توصية ولا إلى أهلهم يرجعون ونفخ في السور فإذا هم من الأجداث إلى ربهم ينسلون قالوا يا ويلنا من بعثنا من مرقدنا هذا ما وعد الرحمن وصدق المرسلون إن كانت إلا صيحة واحدة فإذا هم جميع لدينا مهدرون فاليوم لا تظلم نفس شيئا ولا تجزون إلا ما كنتم تعملون إن أصحاب الجنة اليوم في شغل فاكهون هم وأزواجهم في ظلال على الأرائك متكئون لهم فيها فاكهة ولهم ما يدعون سلام قولا من رب رحيم وامتازوا اليوم أيها المجرمون ألم أعهد إليكم يا بني آدم أن لا تعبدوا الشيطان إنه لكم عدو مبين وأن اعبدوني هذا صراط مستقيم ولقد أضل منكم جبلا كثيرا أفلم تكونوا تعقلون هذه جهنم التي كنتم توعدون اصلوها اليوم ما كنتم تكفرون اليوم نختم على أفواههم وتكلمنا أيديهم وتشهد أرجلهم بما كانوا يكسبون ولو نشاء لتمسنا على أعينهم فاستبقوا الصراط فأنى يبصرون ولو نشاء لمسخناهم على مكانتهم فما استطاعوا مضيا ولا يرجعون ومن نؤمره نكسه في الخلق أفلا يعقلون وما علمناه الشعر وما ينبغي له إن هو إلا ذكر وقرآن مبين لينذر من كان حيا ويحق القول على الكافرين أولم يروا أنا خلقنا لهم مما عملت أيدينا أنعاما فهم لها مالكون وذللناها لهم فمنها ركوبهم ومنها يأكلون ولهم فيها منافع ومشارب أفلا يشكرون واتخذوا من دون الله آلهة لعلهم ينصرون لا يستطيعون نصرهم وهم لهم جند مهذرون فلا يحزنك قولهم إنا نعلم ما يسرون وما يعلنون أولم ير الإنسان أنا خلقناهم من نطفة فإذا هو خصيم مبين وضرب لنا مثلا ونسي خلقه قال من يحيي العظام وهي رميم قل يحييها الذي أنشأها أول مرة وهو بكل خلق عليم الذي جعل لكم من الشجر الأخضر نارا فإذا أنتم منه توقدون أوليس الذي خلق السماوات والأرض بقادر ألا أن يخلق مثلهم بلى وهو الخلاق العليم إنما أمره إذا أراد شيئا أن يقول له كن فيكون فسبحان الذي بيده ملكوت كل شيء وإليه ترجعون صدق الله العلي العظيم سورة المباركة الفاتحة بسم الله.
namaz today is 12:20. We'll have our namaz here, and then lunch next door there. So namaz here, lunch next door. We break for wuzu now. Thank you.